If the house always wins, shouldn't you just buy the house? Of course, that's not how it works. Welcome back to CasinoLove. This is the 10th episode in our series where we take a factual look at publicly traded companies in the iGaming space. Today, we are looking at DraftKings. As always, this is not a financial advice. We are not telling you what to buy, what to sell, or what to avoid. Our goal is simply to look at the company, understand what it does, and go through the latest official information. So first, what is DraftKings? DraftKings is a public company listed on Nasdaq under the ticker DKNG. On its investor relations overview page, the company highlights 10.8 million customers, $6.1 billion in revenue, $620 million in adjusted EBITDA, and around 6,000 employees for fiscal year 2025. In its Form 10-K, DraftKings describes itself as a digital sports entertainment and gaming company offering sportsbook, iGaming, daily fantasy sports, digital lottery courier, prediction markets, and other products. For viewers who may only know the brand from sports betting ads, the important point is that DraftKings is not just one sportsbook app. The company started with daily fantasy sports, then expanded into sportsbook and iGaming, later added media, then Jackpocket in digital lottery courier, and in 2025 launched DraftKings Predictions. So the modern DraftKings story is really a multi-vertical consumer platform rather than a single product gambling app. If we break the business down, the core is still very clear. In its 2025 Form 10-K, DraftKings says sportsbook and iGaming together accounted for 93% of revenue in 2025, the same share as in 2024. So even though the company now talks a lot about lottery and prediction markets, the main economic engine is still online sports betting plus online casino. The sportsbook business is straightforward. Customers wager on sporting events at odds set by DraftKings, and revenue is the settled handle minus payouts, what the industry usually calls hold. The iGaming side includes online casino products such as blackjack, roulette, baccarat, and slots. DraftKings says its iGaming catalog combines games built in-house with licensed content from suppliers, including international gaming technology, Light & Wonder, Spin, and Evolution for live dealer services. Beyond those two main products, there are 3 other pieces worth knowing. First, daily fantasy sports, which is where the company started and which still matters for user acquisition and cross-sell. Second, Jackpocket, which lets users order official state lottery tickets through a digital courier model. Third, DraftKings Predictions, launched on December 19, 2025, which the company describes as a standalone app and web product for federally regulated event contrast under CFTC oversight. There is also an important platform angle here. DraftKings says its branded product offerings are tied together by a common account management and regulatory compliance service, and that users can often move funds across products using the same amount and wallet. The company also says it maintains strategic media relationships with ESPN, NBC, and Amazon, and that is the official sportsbook and provider of ESPN. That matters because this is a consumer-facing company that depends not just on odds and games, but also on distribution, brand, cross-sell, and customer retention. DraftKings is still mainly a North American story, and that is important to understand from the beginning. As of February 10, 2026, the company said 39 US states, Washington, D.C., and Puerto Rico had some form of authorized sports betting. Of those 41 jurisdictions, 33 had legalized online sports betting. All 33 were live, and DraftKings operated in 27 of them. For iGaming, the company said DraftKings branded online casino was operating in New Jersey, Connecticut, Michigan, Ontario, Pennsylvania, and West Virginia. Its DFS products was available in 44 US states, Washington, D.C., and certain Canadian provinces. The seasonality is also worth mentioning because it affects how the numbers look through the year. DraftKings says users are typically most active in the fourth quarter because the NFL and NBA calendars overlap there, and those are the most popular sports in its sportsbook products. So when you see a very strong fourth quarter, it is not just a random timing. It is built into the structure of the business. Now, let's move to the latest official numbers. DraftKings released its fourth quarter and full year 2025 results in February 2026. For the full year, revenue was $6.05 billion, up from $4.76 billion in 2024. Net income was positive at $3.7 million, compared with a loss of $507.3 million the year before. Adjusted EBITDA was $620.0 million, up from $181.3 million in 2024. On the Investor Relations overview page, the company rounds those FY 2025 figures to $6.1 billion in revenue and $620 million in adjusted EBITDA. Looking just at the fourth quarter, revenue was $1.98 billion, up 43% year over year from $1.393 billion. Adjusted EBITDA for the quarter was $343.2 million versus $89.5 million a year earlier. DraftKings said the quarter's revenue growth was driven primarily by healthy customer engagement, efficient acquisition of new customers, and higher sportsbook net revenue margin. There is also a useful cost structure point in the official release. For full year 2025, cost of revenue was $3.55 billion, sales and marketing was $1.38 billion, product and technology was $459.9 million, and general and administrative expenses was $673.6 million. That tells you this is not a low marketing, passive software royalty model. DraftKings is a scaled consumer platform that still spends heavily on marketing, product, technology, and compliance. What drove the results? Management's own explanation is worth following closely here. In the annual shareholder letter, DraftKings said 2025 strength showed up across all major verticals. Fantasy revenue increased as Pick 6 began to scale. Sportsbook revenue increased more than 30% year over year as handle grew 11% and sportsbook net revenue margin expanded by more than 100 basis points. iGaming revenue increased 20% year over year as the company expanded its offering and attracted what it described as a broader demographic. Lottery revenue also increased as the company launched scratcher games in additional states. In the fourth quarter specifically, the sportsbook side was especially strong. In that same shareholder letter, DraftKings said sportsbook revenue increased 64% year over year to $1.4 billion, handle growth accelerated to 13%, and sportsbook net revenue margin increased 250 basis points to 8.0%. The company also said parlay handle mix increased by nearly 500 basis points year over year. Customer metrics also moved in the direction management wanted. In the fourth quarter, monthly unique players were 4.8 million, flat year over year, but average revenue per MUP jumped to $139 from $97. DraftKings said that, if you exclude the impact of Jackpocket, fourth quarter MUPs increased 5% year over year. For the full year 2025, the Form 10-K shows average monthly unique players of 4.0 million, up from 3.7 million in 2024, and average revenue of MUP of $125, up from $106. There is another important nuance for viewers who are new to sportsbook economics. The company's own risk disclosures say short-term performance can move around because sports outcomes vary. DraftKings states that a single large bet or the result of a significant sporting event can have a sizable impact on short-term financial performance. In other words, a sports betting operator can execute well and still have volatile short-term numbers if outcomes run against the house. A few balance sheet facts help round out the picture. At December 31, 2025, DraftKings reported $1.12 billion in cash and cash equivalents, plus $469.4 million in cash reserved for users. Total liabilities were $3.89 billion, including $1.25 billion of convertible notes and a $576.5 million Term B loan. Total stockholders' equity was $631.5 million. On capital allocation, DraftKings repurchased 16.0 million shares during 2025 for $571.5 million under its stock repurchase program. This is worth nothing because in a company like this, where investors have long focused on top-line growth, the share buyback is also a signal that management is increasingly willing to return capital while still funding growth initiatives. There was also a meaningful acquisition effect in the background. The 10-K says the Jackpocket acquisition allows DraftKings to participate in the U.S. digital lottery courier product offering, with expected ancillary benefits to sportsbook and iGaming through enhanced lifetime value and customer acquisition capability. Total consideration for the transaction was about $773.1 million. So Jackpocket is not just a side business. Management is framing it as part of the broader customer acquisition and engagement engine. For 2026, DraftKings introduced guidance for revenue of $6.5 billion to $6.9 billion and adjusted EBITDA of $700 million to $900 million. The company said this guidance reflects expected investment in DraftKings Predictions, line-of-sight jurisdiction launches, and disciplined planning as business conditions evolve. It also said that the guidance excludes potential variance from sports outcomes. Then on March 2, 2026, DraftKings held its Investor Day and laid out a broader strategic story. Management said it sees a $55 billion to $80 billion 2030 industry gross revenue opportunity. DraftKings also announced plans for a super app called DraftKings Sports and Casino that would bring together Sportsbook, Predictions, Casino, and Lottery in one integrated experience with a single account and wallet tailored to each jurisdiction. The company said Phase 1 was expected by March Madness, with more upgrades planned through the year. Investor Day materials also make clear that management sees Predictions as a major growth lane. The official roadmap page listed milestones such as market making, an in-house DCM, the super app launch, and later in-house FCM and DCO development. In a separate slide, management said it expects to achieve at least a 30% long-term adjusted EBITDA margin. Those are company targets and strategy statements, not guaranteed outcomes, but they tell you how management wants investors to think about the next phase of the business. The company is also trying to make the app experience broader, not narrower. One Investor Day slide specifically said the super app would deliver a more personalized casino-first experience for some customers, with native casino merchandising inside the Sportsbook app and more casino cross-sell. So the future pitch is not just more sports betting. It is more integration across all verticals. There is one area where it is important to stay neutral and factual because it matters to the story. DraftKings launched DraftKings Predictions in late 2025, and management is clearly positioning it as a potentially large business. But in the 2025 Form 10-K, the company also warns that there are currently numerous lawsuits challenging the CFTC's exclusive jurisdiction over event contracts, especially sports event contracts. The same filing says regulators could request or require the company to stop offering specific products or services. So when DraftKings talks about Predictions as a growth lane, that needs to be understood alongside the company's own disclosure that the regulatory framework is still contested and could change. This matters because DraftKings is not operating in a simple market where growth is only about customer demand. State taxes vary, product legality varies, and regulatory interpretation can materially affect what the company can or cannot offer. The 10-K explicitly says tax rates vary substantially between states and product offerings, and that the company is also subject to a federal excise tax on sportsbook wagers. Now, let's put the stock chart in context. At the time of writing on April 16, 2026, DraftKings was trading at about $23.64 per share, with a market capitalization of roughly $33.27 billion. Because the share price moves every day, it is best to refer to that on screen as the price at the time of recording. The chart is useful here not as a recommendation tool, but as a reminder that the market is constantly reassessing how much value to place on DraftKings' current sportsbook and casino business versus its future plans around Predictions, Lottery, and the super app. So what is the clean takeaway? DraftKings is no longer just a daily fantasy sports company, and it is not just a sportsbook app either. It is a North American real money gaming platform built mainly on sportsbook and iGaming, with additional growth layers in lottery career and prediction markets. In 2025, the company crossed $6 billion in revenue, generated positive net income for the full year, expanded adjusted EBITDA to about $620 million, and repurchased a meaningful amount of stock. At the same time, the company is still exposed to the things that define this industry: regulation, taxes, customer acquisition economics, and the short-term volatility of sports outcomes. For casino players, the important part is that DraftKings is trying to become a broader gambling and entertainment wallet that connects sportsbook, casino, fantasy lottery, and event contracts. For traders and investors, the important part is that the core business got materially larger in 2025, while management is now asking the market to also value products that are newer, less mature, and in some cases more regulatory sensitive. This was DraftKings, not a recommendation, not a financial advice. Just the company, the products, and the latest official facts.